UTB stroke FS space for the opportunity that they are giving to us. As you know, before now, I don't know if they have told us, this class is fully paid for. So some people may say it is free. It's not free. Somebody has paid for it, and that person is FS Space Brokerage Firm. And they expect us in return, as a hand of appreciation, we are supposed to fund with them and also make money through their platform. The money you fund with FS Space is your money. It's not FS Space money. So the essence of you learning Forex is for you to make money. Hence, you have to fund and start trading live. Like today, this evening, we'll also be discussing about fundamentals. As it is now, the market is moving very fast. It's very volatile as a result of what we are hearing, Russia, Ukraine, and all those Western countries preparing for war. You can see that as we are speaking, crude oil has risen up to 100 plus per dollar. Gold is going to about 968 to 970, the price right now. USD is boosting. All the safe havens are really on their peak because of what the market is doing. And that's why we are here to interpret this market and to leverage on the knowledge you have gotten in order for us to make profit from the market. And you cannot make profit from the market if you don't fund with a broker such as FS Space Brokerage Firm. So I will encourage us to make sure you fund in order for you to make money in this market. Okay, let me admit someone. So let's go into the class proper. Today we'll be discussing about candlesticks and how we can make use of these candlesticks to make profits in the Forex market. Let me share my screen. So what you are going to do in this class, we'll look at the slides. While we look at the slide, we are going to correlate what we have in the slide with what is happening in the market. Okay, what we have in the slide, and then will show us practically on the market, on the chart, to see how these things play out. Just like I said, it's not a theory class that will just come and tell you ABC is that, this is that. No, the market is purely practical. As you're learning, you are making money. That is even the good side of the market. It's not maybe you went for an apprenticeship somewhere and then you learn for 2 years or 3 years. After learning, before you now start to look for a way to make money. No, in this market, as you are learning, same time you are making money in the Forex market. If you say this candlestick does the buy, you enter it, you make your money. If you say it's sell, you enter it, you make your money. So that's one good benefit about this market and the class that we have right now. So candlestick patterns. Candlestick patterns. Before now, there are different kind of patterns we have in the Forex market. Let me show us a glimpse of what I'm talking about. Let me show us something now. Let me show us. Just want to show us. Okay. I don't know why it's not coming. Okay, it has come up. So I just wanted to add something to it to enable us get it. Let me add the bar chart. Add the bar chart. Okay, we are good to go. So right now, when they started Forex, this market, you will not see such a thing like this. You'll be seeing lines. We have three types of charts. We have the line chart, we have the bar chart, which is this. Let me give us a plain chart. Let's see. A chart that has nothing. Okay. Now, this is a candlestick chart. This is the line chart. You see line on your screen, and you are expected to make use of this line chart to make profits. Do your analysis and then make profits from this line chart. That is what we are expected to do. At different times, different persons brought out these things in order for us to have access or to understand what is really happening in the market. This one you're seeing now is the bar chart. This one is the line chart. While this other one is the candlestick chart. Okay, so let me just go back. I just wanted to bring that to us in order for us to understand what it means. So let's go back. So now I want to talk about the candlestick patterns using the candlestick chart for us to make money in the Forex market, or for us to understand what the market is saying. We need a chart, okay, that will interpret what the buyers and the sellers are doing. If not for this class or for the course of this lesson, you may open your chart and you'll be seeing green candle. You'll be seeing white candles. You'll be seeing black candles. You'll be seeing different colors of the candlestick. But you may not be able to understand what those things really are. Why? Because you have not been told how to make use of them. You don't know what the buyers are doing. You don't know what the sellers are doing. The only thing you know that you just see something that is shaking, is either going up or is going down in the market. It's either you're using the line chart, the bar chart, or the candlestick chart to understand the market. But in the course of this lesson, we'll be talking about the candlestick, which is the candlestick chart. Now we are incorporating it to be candlestick patterns. Why? Because we may be using 1, 2, or 3 candlesticks in order for us to get what we want to get in the market. So now, put simply, candlestick pattern is a way of communicating information about how price is moving. A candlestick pattern conveys 4 pieces of information or characteristics. There are 4 major informations that the candlesticks will give to you. And the informations are the open price, the close price, the high price, and the low price. Now, if you look at this screen now, I hope you can see my screen. Please unmute yourself and speak if you can see my screen.
We can see it, sir. We can see it, sir.
Okay, very good. Now, if you look at this screen, you will see 2 different types of candles, colors. On this one, you will see it's colored with a white. On this particular one, is colored with black. But the one I showed you on my chart, on the FS space background, that one, you discover that we're having, let me show it. So you just go straight to it. Let me show you. You discover that we are having green and we are having red. Now, each one of these, either the green or the red, they have their meaning. They have what they symbolize, the symbol. What do they mean? Okay. So that is how they are being represented in the market, the candlesticks, and you need to understand them in order for you to make profit from this market. Now, on this particular slide, we are having white background, white coloring, and the black. Now, this white signifies the bullish candle. On my own, this white on my own is the green candle, this candlestick. While this black on my own, which is the bearish, signifies the red candle on that particular MT4 platform using the FS Space brokerage platform. So now when we say bullish, we already know that we are talking about buying. When we say bullish, we are talking about longing. We want to long, want to buy the market. Okay, want the market to appreciate. Why when we are saying bearish candle, what we are saying that the market is going to sell, or the market is going bearish, the price is going to depreciate, the price is going to short, we want to short. So this language are things you have to understand in the market. Now on the bullish candle, because we want to expose some important things that candlesticks gives to us, we have the high, we have the low, we have the open, and we have the low. I repeat, we have the high, we have the low, we have the open, and we have the low. Now, these are the informations that is revealed to us, through the candlestick pattern. Now, when a market opens, I'm going to show you practically on the screen, especially right now that the market is running. When the market opens, for a bullish candle, this is where the market starts. When the market opens, this is where it starts. So when the market opens here, sometimes for my boss that normally use the word handshaking, you discover that the market will tend to go down. If the market wants to go up, the market will first of all go down. Now, after going down for a while, the market will now start to move upward. Now, when it opens here, I discover that the market will start to go down. And that lowest place that it stops before it now started appreciating to the upper side, that lowest of low is this low that you are seeing. That low is this low. The market started here, which is the open, for a bullish market, for a market that wants to buy. Please, let me just respond to this. So when the market opens here, if it wants to go up, you discover that that market is going to drop below. Please mute your mic. Mute your mic. Now, you discover that the market is going to go down. Now, the lowest low that the market makes, especially for a bullish candle, is this low that we are seeing. After doing this, you discover that that market will now start to rise. And then it will make the highest high. At the end of it, you discover that at that height, that market will leave that height and then close here. So you discover that the market is giving us an opening price where it opened and it went below it. After doing that, it went back to the upper side and then you made this high,
before it now went back to close. I want to show you an example of what we are talking about.
Let me show you an example of how this market does that. Let me see which market I'm going to use now. You can see this market is really falling. Let me go as low as 1 minute so that we'll see it.
Now, look at this market. It opened. It has opened. It went up first. It first of all went up. This 1 minute now. Look at where this one opened. Now, what it did, it went, first of all, went up a bit and dropped a wick there. That is a high, the highest high for it on the high side. Then it now started going down. You discover how this market is going to close now. This market is either going to leave a wick on the closing side. You look at this one, the market opened because it's going down. It opened on the upper side, and then it first of all went up. You thought that the market is going to buy. No, that market want to go and do a handshake, just like Sir Josh will say. You see this one now, this one is going back. Now, if this market happens to close here, it has gone down to do its low. You see, it has closed. It has closed now. Now, this market opened here. It went up a bit. First of all, did a high. Now, went back and started going from the opening price here. It went down, made the lowest of low. It now went back to close on its body. I hope you understand what we are saying now. Hello, are we following?
It's not clear, sir.
Okay. Now, if you look at the screen, let me open the other one so you will see it. Now, if you look at, because the market right now is going down, it's a bearish market, it's a downtrend market. You will discover that that one is printing red. So that red for this course now, what we have as the red is this black. So when the market opens, as soon as the next candle wants to form, for instance, this candle is the new candle that wants to form. As soon as it forms, this is where the market is going to start. And when the market starts here, you can either see that the market will first of all go up and make this move up as if you want to buy. For a newbie that do not understand how this market goes, you will not say that the market want to buy you. The market want to buy. But all of a sudden, you see that the market will just come back to where it opened and it will start going down. And when it goes down, it will now go to the lowest of low to test a price. When it tests the price, it's now going to close. Sometimes it will close below or higher than the lowest of low. So look at the closing price, look at the opening price. The market went to test a price up, which is a wick. We call it the wick. And then the lowest low, we also call it a wick, which is the lower shadow. Now, on either side, either the bullish market or the bearish market, you discover that the market always opens and at the same time, it always closes. When it closes, then it will open another candle. As soon as the market closes, it will open another candle. As soon as the market opens, that is when this market opens. It will go up to test the high and go down to test the low. Now, after knowing that, we have to know why we are trading using candlesticks. Why are we trading using the candlestick? Just like I've told us earlier, that these candlesticks, they convey a lot of information about the trading period. There are informations that if you are not taught, you may not understand. If, for instance, as a newbie, you come to the market and you see the market just rising, maybe showing a green candle. Somebody told you when you show a green candle, the market is buying. And then as soon as you see a green candle showing, you entered, you press your button for a buy. And then the market started selling and you cry. And you say, this market, I don't understand, this market don't collect my money. It's because you don't understand how these candles, the information that these candles are bringing to the table. So why do we trade using candlestick? It's because of the information that it communicates to us that makes us to understand when we should buy or when we should sell. Okay. Now, another thing is the power, whereas the candlestick with a long upper wick beyond its body indicates the power these things conveys to us, and the ability to read the candlesticks allows the price action trader to become a meta trader strategist, taking into account the behaviors of other traders and larger scale market movers. Okay, what this does is it gives you an edge in the market to understand even what the other retail traders and the big boys, what they are doing in the market. I can just simply see a candlestick and tell you that this is what the market is going to do. Or I can just see a candlestick and tell you that this market is going to sell. Why do I say the market is going to sell? It's because I have gotten an information through that candlestick pattern that tells me that this market is about to sell. So if I don't see that information, I will not sell the market. If I want to buy, I will be looking out for patterns, candlestick pattern that will show me that this market, they want the big boys or other retail traders, or there is more people or more traders that has interest on buying it. All these things you are going to learn and know them in the course of this training. So let's move on. Now, candlestick formation. Candlestick formation can be divided into three types of reliability. We have the low reliability, we have the medium reliability, and we have the high reliability. There is a pattern you will see in the market. You don't need to enter that market yet. You need to wait for other things to confirm that this market is going to buy or this market will sell. Now, there are other candlestick patterns that we also see that you will be in between taking a decision. But there is a candlestick pattern you will see in the market. You don't even need any other confirmation to tell you that that market is going to buy or to sell. Rather, as soon as you see it on those strategic levels, those key levels, those native levels, you discover that you just enter that market with assurance that that market is either going to buy or they are going to sell. Why? Because out of the 100 times you have seen that particular candlestick pattern, most of the time, like up to 80%, 70% of the time, whenever you see it, you discover that that candlestick always plays out as it's supposed to be. So we have three major informations based on the reliability, which is the low, we have the medium, and we have the high. Now we have, first of all, the low reliability candlesticks patterns, which we have as the Doji and the Hammer family. The Doji and the Hammer family. Whenever you see a Doji candlestick, know that you are having a low reliability candlestick. Your assurance in that market for either a buy or a sell is low. Now we call them indecision candlestick patterns. they are indecision candlestick pattern. The doji or the hammer candlestick pattern, they are indecision. They don't really tell you that, now I want to buy or I want to sell. Okay? But whenever they show up in the market, they are telling you that there is a decision that they want to make in the market. So as a result, you don't know that particular decision. Rather, you wait for a confirmation in order for you to enter that market. Now, one of it is under the doji, which is the gravestone. The gravestone, when you see something like this, the gravestone, know that that market is giving you an indecision. Another one is the indecisive doji, which is a traditional. We have the dragonfly and we have the long-legged doji. All these ones here, they fall under doji, but they have some salient information that they are giving to us, which we need to know as we proceed in this course. So the number one, we are going to look at the indecisive doji candlestick. Now, in this indecisive doji candlestick, you discover that the closing price and the opening price are at the same level. It opens and it closes at the same place. Now, what do we mean? If you look at this, we are saying that a doji occurs when the market opens and closes at the same price level. That is the general doji. It means the market is indecisive as neither buyers nor sellers are in control. On its own, a doji is a neutral candlestick pattern, just like I told you, because it is a low reliability candlestick pattern, you don't need to depend on it with all the assurance that this market will buy you or this market now sell. No. Except you are an experienced trader, and when this thing prints, you can be able to say, at this level that this thing is printing, I'm going to take a buy or I'm going to take a sell. But it's not that advisable because they have low reliability. So this doji is indecisive in the sense that the buyers and the sellers, no one is taking control of the market at that particular point in time. Now, let me show you an example of it. Now, if you look at this chart, a market that is buying from this level, this market is buying from this level now, this native level, the market bought and broke to this upper limit. If you look at this, when it came to this place, resistance, this market went there and retested it until it now broke and printed this indecisive doji pattern. And when this market printed this, they were trying to make a decision because that place is still a zone, it's still a supply zone, a resistance zone. They are still trying to decide, should we buy, should we sell? Should we buy, should we sell? At a point, because there are more buyers in the market, they just pushed that market to the upper side and the market started moving in the direction of the bulls. Now, if you spot a doji in an uptrend, it means the market is temporarily in an equilibrium. They are still trying to make a decision. Once it's rested enough, the market is likely to move higher since that part of the least resistance. Now, since the market has already established that it is on the uptrend, the market is already on the uptrend. When you see it forming the indecisive candle as being the doji, that opens and closes at the same price, you discover that if it is on the bull side, the market tends to move in that direction. But mind you, you need to know that at that point, the buyers and the sellers, no one is in possession or in full control of the market. They are just trying to make decision, where will the market go or where will the market. If you go to the monthly time frame, because of this candle, that is when you discover that the market is doing a range. You have been taught about the ranging market, consolidation, market moving at the same level, consolidating at the same level for a long time. If you see a doji printed on daily, go to H1. That market is just moving within a height. It will just go up, go down, go up, go down. And for those that know how to trade the ranging market very well, when they draw the upper limit and the lower limit, they will just place a buy, a sell from the top. When it comes to the down, they place a buy. Go to the top, place a sell. Go to the down, place a buy. Why? Because the buyers and sellers, they are fighting who will overthrow the next person and gain a higher control on the market. So let's go to the Dragonfly. The Dragonfly. Now, the Dragonfly doji occurs when the opening and the closing price is at the same level, but with a long lower wick. With a long lower wick. Now, if we look at the other indecisive doji candle, the opening and the close are the same, but the wick on the upper side and the lower side, they are also the same. Now, but in the Dragonfly, just like the name said, Dragonfly, that means it wants to fly, the Dragonfly. Something that tells you that the bulls, the people in control, are the people that are still buying. They are the ones in charge. So the Dragonfly entails that it's an indecisive candle, doji candle, but it shows an aggressive pressure from the buyers. What do we mean? If you look at this market opened and then went down. You wanted to sell, telling you that the sellers, they want to enter this market. And all of a sudden, the buyer said, no, we can't allow you to sell now. We are still in charge of this market. And then the buyers removed all the selling pressure that came into the market. They sent it back. And then the market closed. Now, some persons will say, because they are seeing a red candle, market want to buy a sell. For those that do not understand the timing, because we are going to teach you also the time frames and how these things behave during the opening and the closing of the market. If it is an H1 candle, you discover that most time I want you to go and practice this. It's not a theory. Practice it and engage the market with it. When the market for H1 candle, when it opens and the market wants to go down, it's a bearish market. We discover most of the time that the market will first of all go up. From the first minute, 1 minute, 2 minutes, 3 minutes, 30 minutes, you see that the market will be going up, Sometimes up to the 40th minute, that market will still be buying. But mind you, that market is on a downtrend that want to sell. For those that just came into the market that have not been taught by the UTB Trading Academy team on how to engage this market, discover that they will just jump into the market and say, this market now buy you. Might buy this market. And all of a sudden, around 45, 50 minutes, you see all the buying that market has been buying, you just start to drop. And you start to open mouth and say, Jesus. You be like, say, my community people, they monitor me. Nobody, they monitor you. It's because you have failed to learn how these candles behave. And that is why we are bringing it for us to learn how they behave. Just like this one. The market opened and then the sellers came in. They started selling. Maybe if this is a 1 hour candle that I want to print, for the first 45 minutes, see this candle will just be selling. And you say the market want to sell. Market want to sell. All of a sudden, 45, 50 minutes, everything is sold. It will just come back and then close here. And the next candle will now open. You say, Jesus, what is happening? So you need to understand. Now, when you see this dragonfly, it means that there are aggression on the buying side. The aggression from the buyers is much. They are still the ones in charge. The next one we have about the dragonfly. This tells you when the market opened, sellers came in and pushed the price lower. However, it's not long before the buyers took control and fought their way back higher. And finally, market closed at the price where it opened. This is a sign of strength as the buyers are in control. And here, how you can trade the Dragonfly Doji. So when you see this, know that buyers are still in charge. The big boys, the buyers, you mostly see it in the uptrend. Now, if you look at this, you will see the buyers playing out here. You know, support is an area where the buyers have more pressure. So whenever you see this dragonfly on a support, on your demand zone, on your native levels, we have been told that you should be looking for buy. So as soon as market comes to that place and you see a dragonfly doji, my brother, on a support zone, key level, my sister, you don't need a pastor to prophesy to you. Start to look for an entry. But you have to wait for a confirmation because the market can still do a flash and invalidate it. But when you are seeing it on the buyer side, it means that buyers are in charge. As a result, be looking out for a buy. Now I can see, look at this place, a potential exit after buying from here. This is a ranging market, just like I said. Sell here, buy here, sell here, buy here, sell here, buy here. If this is a H1 candle, this is a H1 time frame. When you go to daily or weekly, all these things that is printed, all these things printed here, all this candle, buy here, sell, buy here, sell here, buy here, sell here. All these things is going to print what we call the doji candle, indecision. Everything here. Let me go and look for one. So we'll not be speaking English and we forget. Now look at this. This is a daily now. Let's go and take that on a smaller time frame. Look at what I've been saying. Now go to H1 because you have to understand how this market behaves. Look at it. Let me compress it a bit. Now all these things is printed. All this up, just like I told you, sell here, buy here, sell here, buy here, just like that. This thing is an indecision in the market on a higher time frame. But when you go to the lower time frame, the market is doing up, down, up, down, up, down, up, down. Now, if you go back to that daily, that whole rubbish that they printed, look at it. Look at it here. Look at it. Let me zoom it so that you will see. Look at it. Only this small thing. Let me delete this. Only this thing that printed on daily. But if you go to the lower time frame, you discover that that market has been doing up, down, up, down. What are they doing? The buyers and the sellers, they are fighting to gain control in the market until the buyers came in, say it's still our zone, and they bought it to this level. All of a sudden, sellers came and then they push it down. So when you understand how this candlestick behave, or the candles that are printed, now you discover that at this point that this candle has been printed on a native level zone, on a native key level, you discover that that market started falling. After doing some ranging, it started selling. And look at the sell. Imagine you saw this on the daily, and the market did this, and you saw this engulfing rejections. Rejections. I will teach you all this. And you saw this, and you enter this market. Even don't go and collect everything. Don't be too greedy. And you sold to this place. 81 pips, $81. You would have made a very good money that day. Now, I was telling you something about the candle opening. This candle, after closing here, let me show you. When this candle closed, the candle opened here, went up, closed here, closed here. And then this one opened after going up and down, showing weak. This one now opened and went up to test, to do a handshake with the previous candlestick. And then it went back, went down, printed this week, the lower, and then went up to this place again. Went up again and then closed here. You can see how this market is opening and how the market is closing at the same time. So let's go back. Let's go back. Why I'm taking my time is because I want you to understand these points, because you need them to make money in this market. Now, the next doji candle is the gray stone, the gray stone. Now, on the gray stone, it is the opposite of the dragonfly. The gray stone shows that the market opens, close at the same level, and leaves a long wick on the upper side, which shows that the pressure is more on the selling side, which means that sellers are in control of this market. That is the gravestone. Sellers are in more control of this market. So it tells us that there are more sellers in the market. Whenever you see a gravestone, look at it. Market went up, key levels, it rejected, created a very more wick on the upper side, and then it came and gave a smaller wick on the lower side with a closing body. Okay? Now you look at this smaller one here. This is the dragonfly. Sometimes this is called the hammer. It's through that gravestone that you now discover an evening this thing, a dragonfly on the upper side. You see rejections. You see rejections. See the higher wick. When you go here, I see this other wick. You can see the wick rejecting from this place, and the price closed at the same level. Now let's go. 2, 4, 4, 4, 2. Now, if you look at this market, this slide, we have the analysis of the Doji family. The Doji information, what it means is just something just like what I've told you. The symbol, this is for Greystone, this is for Dragonfly, and the traditional indecisive Doji candle stick. Now you have the resistance. When you see a Greystone in a resistance, it means that the sellers are aggressive. Sellers, they don't want to buy again. Sellers have stepped into the market. But when you see it on the support level, it means that buyers are present. Buyers have started entering this market. The buyers push the market up, and then sellers still dropped it down a bit to close at the same price. So when you see it on resistance, my brother, you don't need to be prophesied for. Start looking for entries after that indecision candle for you to engage the market for a sell. But when you see a Greystone on resistance, know that the presence of sellers are already in. But when you see it on support, that is aggression from buyers. They have entered that market, and any other opening you see after that market, start to look out for entries, especially when you see it in those native levels. When you see it in those native levels, those demand zones, supply zones and demand zones, those are the zones, the key levels that you look out for these things. And that's the zone that you are taught that you need to take your entries. Do not enter aeroplane on the air. It's not possible. You will crash. So when you go to those native levels, especially for this Dragonfly, if you see it on the support, enter after you have seen other confirmation. Enter for a good buy. Put your stop loss. Throw away the password. You are in for a good profit. You are in for a good profit. Indecisive Doji, which is a traditional Doji. What it means is that the buyers and the sellers, they have equal strength. Just like the one I showed you on the chart. The one I showed you on the chart. On that daily, it showed, and I opened it on H1, open it on H4. You discovered that it was doing buy, sell, buy, sell, buy, sell. The buyers and the sellers are fighting for who will take charge, control over the market. And because the market, it was spotted on a support, key resistance zone, you discovered that that market started selling. Even if you don't want to take everything in the market for day traders, you will take at least 80 pips. If you are using 0.1, that is $81. That is money. If you are only trading these things, understanding candlesticks. Now, a doji, in conclusion, represents indecision in the market. Buying and selling pressure is equal. Dragonfly represent more strength on the buying side, while Greystone represents more strength on the selling side. That's more pressure. You can trade both the Dragonfly and the Greystones in a range or trending market. Whenever you spot this market on a higher time frame, this candlestick on a higher time frame, you can start trading it as a ranging market. Just mark out the highest high, mark out the lowest low, put your pending order, put stop loss. As soon as market comes to that place, it's going to trigger you and it will start selling. Your take profit will be hit at that low. Enter another one there. That market will go up, trigger you, take your profit up, it will do that touch up to maybe 4 times before that market may just break to the upper side or break to the lower side. So whenever you see them on higher time frame, go and enjoy yourself for a ranging market. So we said on the low reliability, we said we are talking about the hammer and the doji. The hammer and the doji candlesticks. Now we have discussed the doji. We now talk about the hammer candlestick formations, which is another low reliability candlestick formation. Okay, and this hammer family is categorized based on 4 families. We have the hanging man, we have the inverted hammer, we have the indecision hammer, and we have the shooting star. Hanging man, inverted hammer, indecision hammer, and the shooting star. So let's go. The first one is the hammer candlestick pattern. The hammer candlestick pattern. Whenever you see the hammer is just like the dragonfly. But in this case, the hammer has more body. It's almost in the form of that dragonfly, but it has more body and it drops more wick on the lower side. So whenever you spot this hammer on the chart, especially on support zones, native levels, enter the market, take your profit. Whenever you spot it, it is after this formation, through this hammer, that you now discover things like morning star and other types of formations. So whenever you spot it in the market, know that buyers have already started entering that market. What does this mean? Market opened here, and then the market went up. And then that market, the sellers push you down to this place. All of a sudden, the buyer said, no. We have to bring this into the upper side. And they brought it, and it closed with this full body, showing that there are more buyers. My brother, when you see this, it means that on a support, it means that market wants to buy. When you see this on a resistance, it is another name. It is another name. Now, let's see, just like I've explained, say the hammer candlesticks appears at the bottom of a downtrend and signals a bullish reversal. Whenever you see it on the support, when there is a downtrend, and you discover it on those key levels that you have marked out, know that that market is preparing for a reversal to the bullish side. The pattern indicates that the price dropped to the new lows, but subsequently buyers' pressure forced the price to close higher, hinting at the potential reversal. The extended lower wick is indicative of the rejection of a lower price. When that lower wick is so high, just like the dragonfly, it indicates that the pressure is on buy side. So what you do is to look out for a confluence, a more confirmation to enable you engage that market for a buy, and you take your profit. Look at one example here. We are going to spot out all these things on the chart. We have spotted out the indecision. We are going to look out for a hammer on the chart. If you look at this, the market came down. Okay, bearish. And as soon as it got to this native level, that market printed a hammer. And this hammer did not even print a wick on the upper side. It means the pressure is much to buy. And he discovered that after that, it started rising. It bought again, and that market started flying. If you look at it on the chart, let's go and look for it. If you see it, tell me. Let me see how you can identify. If you see a hammer, you want to look for it on a support zone. We are going to do this together so that we'll learn faster. Start looking out for them. Can you see anyone here? Let's go. Look at this hammer. Look at this hammer here. Look at this wick from this place. The market, the pressure went down. And this type of thing is mostly created by news. You discover that news, whenever there is news, you see such things like this. This market sold from the opening. This market sold on a daily time frame, sold 571 pips. 571 pips. Imagine marking out this support zone, and this market came to this place and you enter, my brother, or after seeing this market close like this as a hammer candle, and you enter this market. Yeah, this is a daily time frame. You enter this market. Let's look out for what happened there. Let me look for it. Okay, December 2019. Let's see if H4 can go to 2019. H4 cannot go. Okay. Okay, let's go to lower time frame. Now look at another hammer here. I told us if you can point a hammer, look at another hammer on a support. Now we told us that the hammer is a low reliability candlestick pattern. So whenever you discover the hammer, you need confirmation. So let's go. Look at another one here. Hammer. Look at another hammer. This market bought from here after it closed here. Look at another hammer. You can see how they are behaving whenever we spot them. Okay, look at another hammer here. This is another hammer. Let's just be going. Discover that we are seeing more hammer. Look at that gravestone doji. Can even be spotting out those other ones we have treated. Look at this one. Long-legged doji. Okay. Indecision candles. Gravestone doji. We told you when you spot it on support, know that buyers are present. Look at hammer. So let's keep going. Look at hammer here. This one is Dragonfly. It even this place even printed more. Hammer. You came here, I printed Dragonfly, printed hammer, printed Indecision Doji, okay? And then look at what the market did. If I see this, multiple rejection on a key level, multiple rejection on a key level, I will buy. I don't need anybody to tell me to buy. Enter the market and buy. You discover how the market has been doing whenever we see them. Look at. You always see them spotted at those levels. Okay, let's go back. Let's go back to the slide. Now we have seen that hammer. Now we have the inverted hammer, which we can also call the shooting star. The inverted hammer, which we can call, it gives us a very good information. The shooting star. Whenever you spot it on a resistance, when the open and the close are roughly the same price, this candle is characterized by a small body and a long upper shadow, and it is a bearish version of the hammer. So when you spot this on a resistance, remember we said when you spot the hammer on a support, know that buyers want to step in. But when you spot the inverse of it, which is the inverted hammer called the shooting star, note that the sellers want to step in. Sellers want to step in. You see a market going up on an uptrend, and you discover an inverted hammer. Know that that market wants to sell. Look at the shooting star. Shooting star. When you see it on the low, know that the buyers, the sellers has more pressure. Buyers are stepped in, but sellers has more pressure. Now, when you now spot it on the resistance, that's your market for the day. And then you wait for a confirmation. As soon as you get that confirmation, enter the market for a sell and make your money. So what it means is that the dragonfly, the hanging man, not the hanging man per se, the hammer and the inverted hammer gives you an opposite of what the buyers and the sellers are doing. Whenever you find the hammer on a support, it's for a buy. Whenever you find the inverted hammer, which is a shooting star, at resistance, you should prepare yourself for a sell. But we said that these candlesticks, the hammer family and the doji family, they have a low reliability for entry into the market. So you need a confirmation for you to enter the market, except you are aggressive and you know the key levels that you are entering. As soon as it gets to those places, for those that knows where they are entering the market, that is when you see things like good entry, sniper entries. My colleague will call it okra soup entry. When I just laugh whenever he start calling these names. You know, when you see it on those levels, I don't need to be told about how to enter, whether I see a shooting star or I don't see a shooting star. When I see those key levels, psychological numbers, those native levels that I know they are very strong, I've entered the market. That is for aggressive traders. But as a newbie, you need to make a confirmation, because if you are too aggressive, the market will destroy your account. So it's better you become conservative and enjoy the ride with the market. So we have the analysis for it. When you see this, the hanging man, when you see it on resistance, it is a hanging man. That is that hammer. When you see it on the resistance, is a hanging man. Prepare to sell that market. When you see it on support zones, prepare to buy. The inverted hammer, when you see it on resistance, is telling you that it is a shooting star. Inverted hammer, prepare to sell that market. When you see it on the support, yes, buyers are present. Wait for confirmation. That confirmation will be a morning star, and then you enter the market. Now, when you see it on the support, aggressiveness of buyers. But when you see it on the resistance, sellers are present. But the aggressiveness is on the bar, low that level, and they push it back to the upper side. Now, when you see the inverted hammer on, when you see the inverted on the support, buyers are present, yes. But when you see it on the resistance, I repeat, resistance, key level, there is an aggressiveness of sellers pushing price. They don't want that price to go above. They don't want that price to go above. Let's go and spot it out. Let's see. Let's go and look out for. Let's go and look out for inverted hammer. If you see this one, I will not say anything. You will be the one to show me inverted hammer. You will show me inverted hammer. Let me go to H1. I'm just opening any of the market. If you see it, I told you on resistance, that is where we want to be seeing it. If you see it, unmute yourself. Have you seen anyone? Yes. Unmute yourself. If you see it, okay, where?
I've not seen any.
I've seen one.
Okay, the person that said, Sonia, where did you see it? Where?
I have not seen any.
Yes.
Okay, inverted hammer. Inverted hammer, okay. Let's keep going. Just be looking at the chart. You see it more on the uptrend at key levels. Now you see it here too. Look at it. Inverted hammer. It tells you that buyers are present, but there's an aggressiveness on the selling side. After seeing this, look at what happened, because this is a key level. That market started buying. But me, I prefer seeing it on the resistance. Yes, has anyone seen anything? Look at your chart. No.
Yes, I've seen.
Where?
Directly below where you have the magnifier. That's the zoom, the plus zoom. Directly.
This one?
Come down.
Okay. This one?
Yes.
Okay. That is one. We have seen one now. Yes. Any other one? You can see this one here. Now, one thing you need to notice is this. Whenever you discover these things on the resistance, how does price react to it? Whenever you discover these things, this inverted hammer, how does the price react? Whenever you discover the hammer, how does price react to it? That is what we are looking for. It's not just seeing the candlestick. It is the information that the candlesticks pass to you as a trader, how you can use this candlestick to make money. We are not coming here to draw and to look at candlestick. We want to make money whenever we see this candlestick. How will you enter the market? How will you engage this market whenever you see this candlestick pattern? That is what I'm only looking out for. And where will I see it for me to engage in this market? Am I supposed to see it in the middle? Am I supposed to see it at the resistance? Am I supposed to see it at the support? Because my interest is to make money in this market and not to lose money. I don't want to lose money. I don't even have money to lose. Talk more of to lose one. Why I'm in this market is to make money. And one thing that is important in this market is that I can make money in dollar and exchange it to naira. Naira is dying. So since I'm not in Europe, I am here. I make my dollar and I spend it in naira. I'm a big boy. That is the market. You enjoy the market. Whenever you spot them at key levels, what do you see? You start looking out for them. Look at this one. Key levels. After drawing your trend line, you have drawn your support zones. You are using either I don't know if you have been taught moving average. All these put together, you have the key levels either as a fixed key level or as a dynamic key level. If you are using the moving average, you have a dynamic support and resistance. Whenever you spot them, how do you make use of them? I'm not interested on seeing them and looking at them as if I'm watching a picture. No, it's for me to use it and make money in the market. That is my interest. There are some traders, they don't even look out for it. If you are an indicator trader, you don't even look out for any kind. What you are looking out for is, as your indicator told you to buy, yes, buy and take your money. You don't have time. Now let's see the medium reliability candlestick. This candlestick pattern is called medium reliability candlestick because it consists of two candlestick patterns. Before we discuss this candlestick pattern, we shall discuss trend candlestick called the Marabuzo, which is the first one that we are going to look at. Now, the Marabuzo, as the name is called, that Marabuzo, the word Marabuzo means a bad head or a shaved head in Japan. And this is reflected in the candlestick, lack of wick. If you are in Japan or you say Japanese man, and elder, you call him Marabuzo, you don't find trouble. You go and call somebody Marabuzo, say because in hair they shine, he has a bad hair. The meaning is Marabuzo. So this Marabuzo tends not to have a wick. It does not leave wick, just like we told us on our on those doji, the previous candles we saw. You discovered that you were seeing wick. They were leaving wick, long wick. You see long wick down, long wick up, long wick down. But on Marabuzo, a perfect Marabuzo, you may not even see a wick. If you are seeing a wick, you will see a very small wick. This is a textbook Marabuzo. A textbook Marabuzo do not have a wick at all. But on the chart, I will show you marabuzos that have but very small. They are marabuzo and they have their meaning in the market. So whenever you see a marabuzo, you see the closing price and the opening price, they don't have any wick. It means that there is pressure in the market. As soon as the candle opens, it just moves aggressively until the time of that candle elapses and the next one opens. That candle is just straight movement. So that is how marabuzos are being formed. The green is for the bullish, while the red is for the bears. Please permit me to start this. So how to trade the marabuzo candlestick? Depending on where the marabuzo is located and what color it is, you can make predictions on where to put your money, either buy or on the sell. If the green candle marabuzo occurs at the end of an uptrend, a continuation is likely. If a green marabuzo occurs at the end of a downtrend, a reversal is likely to occur. You see a green marabuzo at the end of an uptrend, my brother, be careful to sell that market. You have seen it on a native level. On a native level, a green marabuzo, no wick, no nothing. For me, I will advise you to wait for you to see other confirmation if you want to sell that market from a resistance. If you see it on a support, a green marabuzo on a support, he formed a red candle, first of all formed, and a green marabuzo now formed. If you even look at it, if a green marabuzo formed from a support, it will engulf the previous red candle, which means you have gotten another candlestick pattern called engulfing candle. And if you see an engulfing candle with a marabuzo, you don't need a prophet to prophesy. Me, I don't need a prophet. I will enter that market for a buy, and I will put my take profits above. If it is too small, I will put it at 60 pips, take profit, and take my profits. It will hit it. No matter what they do, is going to that place. On a support, it want to signify a reversal. But when you see a red marabuzo occurs at the end of a downtrend, the reverse is just a reverse of seeing a green marabuzo at the end of an uptrend. It means that that market has a potential of breaking that support and still going down. Sometimes or most times you discover that the support or the resistance levels are being broken by marabuzo. And these things normally occur when there is a major fundamental. There is a news. They release a news and you see the market moving aggressively. And as soon as it moves, it comes to those native levels. It will tell native levels, don't be offended. I want to pass. Open road for me. And you see that marabuzo will just bust that place and it will start moving. So you don't joke with the marabuzo. But if you see a red marabuzo occurs at the end of an uptrend, a reversal is imminent. If you see it at the end of an uptrend, it means a bearish engulfing. I will tell you about a bearish engulfing and I will show you how it happens. It has engulfed a previous candle, which is a green candle. So it is going to give you an engulfing. We'll locate it on the chart too. So let's just see The candlestick with a medium reliability are the dark cloud cover. We have the piercing line, we have the engulfing, we have the harami, we have the tweezers. You know, we first of all said I want to discuss the marabuzo before we now enter this medium. So now we are giving an example, the dark cloud, the piercing line, the engulfing candle, the harami, the tweezer. The dark cloud cover is a bearish candlestick reversal pattern. It is formed at the resistance and not support. The dark cloud cover, it is not advisable to take trade once a dark cloud cover is formed. Part of the gains from D1 have still been preserved. Whenever you see a dark cloud cover, a dark cloud covering a bullish candle, look at the name, dark cloud. It's like rain want to fall. Something covering on that candle, but higher than the previous candle. Look at the dark cloud candlestick pattern. After the formation of the bullish candle on a resistance and the market now jumped, it will leave a gap and jump. When the market jump and leave a wick and then come back to close below 50% of the previous candle on an uptrend resistance zone, you have discovered a dark cloud. And when you see that market enter for a good sell, I tell you, lock, put your stop loss, throw away the key, enjoy the ride. When you spot it on a key level, resistance is mostly formed on the resistance. Now you can look at this one. The market jumped after the formation of this green. Look at how the market has been going. The market jumped to the upper part. And after the jump, the market came down and closed below 50% of this previous green. Look at what the market did. And since it has been jumping down with gaps, showing more pressure on the sell. Whenever you see a dark cloud resistance, go and prepare your money for a sell. A good sell. If you spot it on the daily candle, go to H4, go to H1. Start to look for sell entry. As soon as the next candle opens and go for that week, half of the previous dark cloud, enter that market there. That market is going to give you money. This is how we trade this market and we make money. We have the piercing line candlestick pattern. The piercing line candlestick pattern is the opposite of the dark cloud. It will pierce. It's like something piercing through something. So it's the opposite of dark cloud. On the dark cloud, it is no. You can open if you want. On the piercing, it is the opposite of the dark cloud cover. On the dark cloud cover, you discover that is the red, the bearish candle that is piercing downward, that is coming with a jump and gapping, they now covers back up to more than 50% of the previous. But on the piercing, it gaps down and then goes to do the same thing to the upside with a green candle. So whenever you discover one is for buy and the other is for sell, the dark cloud is purely a sell forming at resistance, while the piercing is for a buy forming at support zone. You can discover the close of the day 2 greater than 50% of the day 1 bear candle. That is greater than the 50%. It goes above the 50% with a bullish candle forming a retracement. As soon as this market closes and the next candle of the next day or the next hour opens and comes down with a wick close to 50% of this, my brothers and sisters, Nobody is telling me to buy this market. As soon as it forms, the next candle comes with a wick here, I will buy that market if I discover this market. Why? Because this is a medium reliable candlestick pattern. And if I see it on those native levels, I am in to engage the market with an assurance that that market, I have an assurance of 60–70% that that market will buy. On that one, we have is an engulfing candlestick pattern. The engulfing candle tends to signal a reversal of the current trend of the market. I will show you all this on the chart. Now, there are two types of engulfing candlestick. We have the bullish engulfing for if you want to buy, and you have the bearish engulfing for a sell. Now, this is a bullish engulfing. When the green candle engulfs the red candle, you can look at it. This candle engulfs is like a guy friending a short girl. I'm just using that analysis. It's funny. It's a funny, but I'm just using that as an illustration. And when the two of them they want to snap, do a photo shoot, you discover that the lady, the height of the lady ends between the ribs of the guy. It means that the guy has engulfed the lady. The reverse is the case when a lady is friending a short guy, a tall lady friending a short guy, and they take a photo shoot, and they discover that the lady has engulfed or is taller. She has engulfed the partner. So you can look at this candlestick, discover that the length of the bullish candle engulfs the previous red, engulfs everything, even the wick was covered. Bullish candle closes above previous candle open. The open of the previous, the bullish one close above it, covers everything. It has engulfed. This was what I was telling you about when a marabuzo is formed at a support. It means that this week will not be there, or this week will be very small, very tiny, very small. And then it will now engulf this small one. My brother, if I see such a thing, if you even see it, please drop it on the platform. Maybe I did not spot it. I will buy that market. I don't need to ask another person for, I will buy that market as soon as the next candle comes, opens and comes to retest this zone. I will buy that market to heaven. I'm telling you. Then it's just the meaning, it's just the same thing. So when this provides a strong signal for a bullish market, whenever you see it, ensure you enter the market for a buy. Look at it. This market was selling. And when it comes to this place, this market now formed a bullish candle that engulfed both the opening of the bearish candle and closed above it. As soon as it closed, this market now opened and came down. For me, as soon as I see this candle coming to this zone, I will enter that market. Look at this. Let me show you. Coming to this zone. As soon as market comes to retest the high, the opening of the previous, almost 50% of the bullish candle, I will enter that market and ride it to the upside. That is how we trade this market. If you understand how this market behaves, you will trade it and make money. And that is why FSPs had made provision for us to learn this. It's not, I've told us earlier, that it's not a theory course. Fund your account at least minimum of $50. $50 is small, but minimum of $50, and start practicing it with the smallest lot size. Start practicing it. Fund your account, because the moment we start teaching you new things, you will be seeing new things and you will forget so many things. You will now become a master. That is, how will I say, jack of all trades. You become master of none. Some persons only trade candlestick pattern. There is nothing on their screen. They just spot the support zone, resistance zone. And whenever they see these candlestick patterns that I've been teaching you now, they engage for a buy or a sell, and they make money. You don't have to know everything in this market to start making money. By the time I come tomorrow and I start to teach you trend line, you will say, oh, trend line, I'm better pass. By the time I come next tomorrow, I teach you moving average, tell you one or two, you will say, oh, leave support and resistance. I'm not going to trade with moving average. My brothers and sisters, it's not everything that matters in this market. Too much knowledge is too bad. Only get one of these things we are teaching you. Fund your account and start trading the market. Start making money. Fund your account. They are even starting this thing today. They will be taking live trades in today's market. Gold is moving. Crude oil is moving. USD is moving. JPY is moving. All the safe haven, Chef, Swiss franc is moving. How do you know that this market will move? You will learn it in the course of this training. And you don't need to be learning every day without making money. Start making money as you are learning. As you are learning. We also have the bearish engulfing candle, who does the opposite of the bullish engulfing. So when you spot the bearish engulfing candle on a resistance, engulfing the previous candle, it becomes bearish. Start to sell. Start to sell that market. Start to sell that market. It signifies a sell order. We have another one, the bullish harami candlestick pattern. The bullish harami candlestick pattern is just like a woman that is pregnant. A woman that is pregnant, carrying a child and wants to deliver. That's the bullish harami. You know, when a woman stands up and the tummy is like this, it's like engulfing your front, but you are not engulfing front. So instead of saying we are engulfing front, we don't have a name, we now call it a bullish harami. Body entirely within the previous body is an indication for a bar. Is an indication. A bullish harami pattern means pregnant in Japanese. We are teaching you candlestick. Candlestick was created by a Japanese person. That is why they call it the Japanese candlestick pattern. When we say marabuzo, we say the man has a bar hair. They use their language to represent the meaning of these things in the market. It is considered as a reversal, a continuation pattern, and it consists of two candlesticks, one covering one, but like carrying it as a baby. For the harami pattern to be valid, the second candle should close outside the previous one. This candle is considered as a bearish reversal signal when it occurs at the top of the uptrend, and is bullish when it occurs at the downtrend support. So the two major places you have always been told that is the Jesus Christ of Forex market is support and resistance. You cannot trade as a retailer with the small money you will have as a retailer. You can't trade this market without knowing support and resistance that have been taught. Do not buy on the air. Always buy at support. Sell at resistance. We have the bearish Harami. We have the bullish Harami. This is the bullish Harami. Now, if you look at the chart, this market carrying this baby, please mute yourself. RAS4. Mute yourself. So when this market is on the downtrend, you see a bullish Harami carrying a baby like a pregnant mother. That market will buy. You come here on the bearish side, on a resistance, you see it carrying a baby upside down. Signifies a sell. Look at it. Bearish Harami. The previous engulfing, the previous is the one engulfing the current candlestick, both on the bearish or on the bullish. You can look at this. Look at this. Bearish. Previous engulf this one. But on engulfing is the current one engulfing the previous. But on Harami, previous engulfs the current. Look at it. On the bullish one, previous engulfs the current candlestick. Now, if you see such a thing like this, what kind of candlestick is this? Can somebody unmute him or herself and tell us what type of candlestick we have here? Yes, I'm waiting. Yes. What type of candlestick is this? Only this one.
A shooting star.
Inverted hammer.
Inverted hammer. Thank you very much. Inverted hammer. When you see it on your resistance, inverted hammer.
When you
Shooting
see
star.
it at support.
Thank you very much. At support. That's inverted hammer, right?
Yes.
So let's go. We now have another one among the medium reliable candlestick patterns, which is called the Tweezer candlestick pattern. Now, this Tweezer candlestick pattern, I just want to finish with it and then take you to the chart so we can see it. I'm going to rush so we can get through with this medium. Now, when you see this tweezer, there are two types. They have the tweezer top and the tweezer bottom. The tweezer means that the two candlesticks has the same wick, the same level of wick and body. Now, the tweezer top, the first one is bullish and the candlestick followed by bearish candle. The tweezer top occurs during an uptrend when the buyers push the price higher. This giving us the impression that the market is still going up, but the sellers surprise buyers by pushing the market lower and close down the open of the bullish candle. This price action pattern indicates a bullish trend reversal, and we can trade it if we can combine this signal with other technical tools. Okay. Now, if you look at it practically, you will see that we are having a tweezer top here. These two wick are equal, or this body will be equal. Whenever you see this one now, just like we said this is a shooting star or inverted hammer. When you see inverted hammer, two of them formed in a resistance like this, and the two of them are equal. body equal height equal week, my brother, I am in for a sell. I don't need a preacher. I am in for a sell. I don't need a mentor to tell me to sell, except there is a war like the one that we are about to witness. But God will help. But for those that are investors, they are praying that the war should carry on because they have invested billions of dollars in the Forex market. And as we speak, they are already seeing their profits. While you and me, especially you now, you don't want to fund the account and enjoy the market. Others have already started making profits because of only the fundamental that is happening now. We have started making profit here. That's the essence of this market. It's not English. When you see Tweezer like this at the top, resistance, enter for a sell. Enter for a sell. You see it in different forms. You can see a Tweezer using a Harami. You can see a Tweezer self as an engulfing. See these two, top, the same wick, the same body, enter for a sell. Look at another one here. Tweezer top, the same body, the same height, at a resistance, enter for a sell. Put your stop loss, 35 pips, stop loss. As soon as market moves and retests and moves again, come carry that your stop loss, lock your entry, throw away your password, give somebody, put your take profits. Don't go and be watching that trade. Some of you be watching trade. A market you are supposed to collect $50, $100 because your eyes always on the chart. You will just see, some people, as soon as they see green, they see blue, they see red, they see blue, see red. As soon as they see 0.50, 50 cents, they will collect profits. How can I be suffering myself and I see a good market like this and I will now go and collect 50 cents? Am I mad? What am I doing in the market? The people that are collecting $100 in the market, do they have 7 heads? Look at Tweezer bottom. When you see the same thing opposite of the top, here, the same level, enter for a bar at a support level. Enter for a bar, catch the trend, and make your money. Sometimes it will form a double bottom, the first one. The second one will now come and form a Tweezer bottom or a Tweezer top, and you see it. You are not calling me to tell me, Robinson, should I buy? Should I sell? I am telling you, when you see it, I say buy or sell. It's a strong signal for either a buy or a sell. Put your stop, take profit, put your stop loss. Enjoy the market. That is why we are here. That is why we are here. So let's go to the charts. We are going to identify some of these patterns. Look at the Tweezer, the one we just discussed now. Look at it. Look at the Tweezer here. It came again and formed again, another Tweezer. First top, this one, second top, showing you a double top. And you will be calling me to tell me, Robinson, should I buy? Should I sell? I am saying, when you see it, sell. Tweezer top, sell it. Especially when you have a confluence of a double top. Sell it. Look at the hammer. Look at the hammer here. You can see what the market is doing. Go and look for an engulfing. Look at this market engulf this whole 1, 2, 3, 4. And you'll be asking me, should I sell? Look at a Harami. Look at a shooting star. Inverted hammer. Look at a Harami. the previous engulfing the current. It is not just only a Harami. You see the first top on a key level showing you an inverted hammer. You now see another one, a tweezer top, showing you a Harami, bearish Harami. And you are asking me, should I sell at a key level? No, now. This is a pure sell market. Measure what you are going to take as profit. This is 49 pips. Collect your profit. If you have discovered that that level is a range, look at it. It has touched here, touched here, touched here, touched here. It tried to break, it went back. So you have already marked out that this zone is like a range on a higher time frame. It will show you a doji. What will you do? You buy. Here you sell. You see double bottom, you buy. Look at a gravestone doji showing you indecision, this candle form, you buy. Look at this market. Look at the gravestone. The market gapped down. We'll teach you gap. Look at engulfing. When you see them, engage them. Look at engulfing. Look at them. When you see these things, and look at engulfing. I told you, as soon as it engulfs with a marabuzo, look at that marabuzo. Let me zoom so you see. Look at the marabuzo forming in a support. A support that I've shown you, a support that I've shown you a hammer. Come again, show you gravestone. Just ranging, double bottom. And it now forms an engulfing with a marabuzo. And you are still waiting. As soon as this market comes down, I will sell this market here. I told you I marked something for you then. Look at it. You know, when we mark it on that slide, you thought that it was a decent. As soon as market comes to retest the previous, I will enter this market for a buy. Put my stop loss below my stop loss, 35 pips. Put take profits. Look at the highest high, the previous high. The previous high is here. I will just measure it. How many pips? 100 and something pips. Because I'm not too greedy, I will just go and take smaller pip. Maybe 80, 70 pips. If you measure 80, 70 pips from here, from that support, look at it. This is 100 pips safe. You make your money. So because of time, I'll be giving us just a few minutes to ask questions. If you have any question, please ask. If you have any question, ask your question. Ask your question, please. Or mute yourself and ask your question. Yes, Rashford, ask your question.
Hello. Yeah,
Yeah, we can
please,
hear you.
with all the studies you've been with, I said with all what we've studied, and we came to realize that the impulsive and the retracement, it also shows when to enter the market. And with this candlesticks also shows us when to enter, buy, and when to sell. So like in a case whereby in a impulsive stage that you are to buy, and this candlesticks also shows that no, it cannot happen like that.
Your network is breaking. I can hardly get.
No, I'm saying that my question is that with the impulsive and the retracements that we did, we got to know that we
Hello?
we have to when it gets to
Hello?
market, we have to sell, and which shows us yes. Hello,
Okay, I can hear
can
you
you
now.
hear me?
Yes, you were saying that in the case of
Uh-huh.
an impulsive move, and the market is showing this candlestick, what will happen?
I said
Your network is
what I'm trying to say is that when it is impulsive, we have to buy, and when it is retracement, we have to sell. And I'm asking, with this candlesticks, if we found one in the impulsive stage, and it's also showing that a sell has to be there, can it happen like that, or we just apply what we learned under the impulsive and the retracement stage? That's my question.
Okay. I didn't get your question accurately, though I got some part of it because of your network. But this is what you are going to do. On a general, we said you should always trade these candlesticks in confluence. A confluence means you should always spot them on resistance zones and support zones. Resistance levels and support levels. Okay? Whenever you spot them at these zones and it gives you a confluence, for instance, whenever you see a doji indecision, we said it has a low reliability. So what will you do? You wait. Low reliability. Okay. You wait. Yes. Okay. For a confirmation. Now, for instance, this is a hammer. It has a low reliability. This is a dragonfly doji with low reliability. What you do, you wait for a confirmation for you to buy this market. If you have marked out that this is a key zone, now before you buy, you now wait. As soon as this market does something of this, you know that the buyers have come in with a marabuzo. You see it. It comes back to retest. Sir, enter that market. Put your stop loss. Put your take profit. That market will buy. So you trade it with a confluence. But when you discover that, like the marabuzo, when you discover that you are seeing a marabuzo, a green marabuzo at a resistance zone, wait for that market to print other candlesticks for you to make a confirmation before you enter that market for a sell. If you don't see any market confirmation for a sell on a resistance, leave that market, because that marabuzo signifies a continuation pattern that can break that resistance to the upper side. Thank you. Yes, King, unmute yourself. I don't know if I've answered the previous person. Yeah, I can hear you. The network is very poor.
Hello?
Dark cloud.
Hello?
Dark cloud cover.
Hello?
I can hear you, but your network is breaking.
Oh, yes, I want you to enlighten me. Yes. please, can you just enlighten me more on that? I did not get it here.
Okay, that dark cloud cover, I want to spot it. It does not show often, but whenever it shows, I can hear you. Now that dark cloud cover, let me show you. Now this dark cloud cover, if you will always spot it on a resistance, not on a support, because it's a bearish reversal. Now what you do whenever you spot a dark cloud cover, you prepare for a buy. What happens in the dark cloud cover is after the formation of the green candle, there will be a jump, a gap for the opening of the next candle to the upper side. And after the gap, the candle will now come and print a red close below 50% of the previous candle. As soon as this thing close, wait for that market. The next candle that will form, if it does any retracement to this place, sell it. Even for me, I will enter it aggressively on a resistance zone. As soon as it opens the next candle, I will enter for a sell. So the dark cloud will always open the next green, the next red candle with a gap. That is what you use to indicate a dark cloud, with a gap upwards, and then comes to fill it. And as soon as it fills it, opens the next, a bit of retracement, enter for a sell. So I will not take much of this thing. In our next class, we are going to see okay. For those that are still in the house, I was just thrown out by the network. So in our next class, I will be answering more of our question because of time. So we will not exceed. We have already exceeded the time. This is 4:10. So I wanted us to understand more on this topic. Make sure you are in the next class so that we can take all your questions. Thank you very much and have a nice day. Please ensure you fund your account in order for you to make profit from this market. There is no need learning Forex if you don't fund your account. It's very important. No need learning Forex if you don't trade. So you can contact any of the admin on the platform and fund your account. So that next class, you can spot any of the entries using these candlestick patterns and enter the market. Thank you very much.